Hi, good evening. This is Hassan Dosani here. I hope you guys are doing well. And if you can hear me and see the screen clearly, please can you type yes? Oh, very good. Very good. Nice. All right. So while we wait for more students who are in the process of joining, let's take advantage and I will take few questions for the next 5 minutes before we can start. So if you have any questions, shoot at me. Do you recommend ethics module? No, not at all. It doesn't have any direct bearing to SBL paper, so do it after the paper. So Dipta, yes, I think so. It's possible. Threat of substitute in quarter 5 forces. I just mentioned about alternates. Yes, that's about it. Exactly. Is it okay to use phrase like I think? Yes, why not? It gives a very personal intellectual touch. What do you suggest for a student who hasn't done anything for SBL? Yes, exactly. So watch my day one webinar in which I had given the study plan for next 3 weeks. So if you have no choice but to follow that study plan, I will repeat that study plan tomorrow as well in my concluding remarks. Should we do more papers? Yes, you can start doing papers because we have done most. Wait for one more day. From tomorrow onwards, you can start attempting paper. Is it necessary to do mock exam? It is absolutely necessary, critical, do or die thing to do mock exams. It's absolutely critical. I cannot stress more than that. Sir, I failed at 49. I had practiced past papers available on the website. So for this time, the same questions to practice is easy for me. Do you think they are enough for me? Yes. I don't want you to practice anything outside SBL because it might confuse you. So just it's bad luck that you failed at 49, and this time you should focus strongly on professional marks and formats. And if you haven't attended the mock based session, then you should attend and have your script marked by any tutor. Do we need to watch all your past webinar? No. Just selected past webinar. I will share a list tomorrow on which past webinars you need to go through in addition to this September webinar. Sir, the 8 questions of SBL will be enough, more than enough. It's not about the number of questions, it's about how strong you get in the techniques. Okay, it's the practice of techniques. So 8 questions are more than enough to learn the technique. Should we just practice past papers till the exam? Yes. Follow the study plan I had mentioned. All right, so 5 minutes are up. I will take more questions towards the end. So let's start with today's lecture. Okay. Now, so day 1, day 2, and day 3, I had focused a lot on business strategies, right? We talked about business strategies, SFA, SWOT, and we talk about finance, we talk about risk management. Today, I want to change the flavor a bit. I want to spend today on corporate governance side and something a little different from core business strategies, because that is also part of your syllabus, the corporate governance, the board of directors, reporting to stakeholders. So let's devote today on corporate governance aspects. It might be a little bit boring because corporate governance topics by nature is little bit dry, and I would try my best to make it interesting, easy, and I would try my best to keep it very, very interactive so that you understand on your own and you participate, right? So what's the today's plan? First of all, we will talk about how to present your answer. That's today's exam techniques. And today we will cover so many topics. So we will talk about internal controls, internal audit and audit committee, professional code of ethics, corporate code of ethics, and public interest. These two topics were left over from yesterday. Remember, we ran out of time, so I brought this today. And then I will do integrated reporting. That is something where a lot of students they struggle. And then the hardcore corporate governance stuff, I will do a new question on that so that we can apply our understanding, family owned businesses, professional skills. The only one left was commercial acumen. So we will talk about that now. I mean, not now, but today. Okay, so how to ask question? You can type your question in the question box, but your question should relate to the slide or topic under discussions. And any general or other question should be asked in the last few minutes in the Q&A window. Okay. So if you want to join my WhatsApp group, please message on this number. I just saw that many students have directly messaged to my WhatsApp. My WhatsApp is like, more than 150, 100 messages right now. So I might not be able to respond very quickly. So please message on this number and you will be sent the link. Okay. All my notes, webinars, handouts, everything is available in this group. So once you join the group, click on the description and there is a link to the Google Drive there. You can download everything. Okay, so let's talk about today's exam technique, which is how to present your answer. This time around, when I was talking to the ACCA team, they categorically told me that the way चेंज करो हाँ आगे can you hear me okay but it's still you know I'm getting some weak signals here can I change now it's better yeah I'm getting green now okay all right thanks all right guys sorry I will just rewind a bit because I just said I heard that my audio was not there so I will repeat okay so as I said that this time around the examiner was very focused on the way students they present their answer they were really pissed off by the way students use the word processor you know tool they want the answer to look professional nice format for them is very important so please this how to present your answer is a very important sensitive thing these days okay so I think we have covered most of them here and there but let's quickly go around it in a summarized manner the first thing is that linking your answer to exhibit is a must we know, by now we must know that right and that we will adopt a paragraph style of writing one paragraph should cover one point only so do not try to squeeze many points into one paragraph the length of the paragraph should be 4 to 6 lines generally okay 4 to 6 lines so just make sure that it is one point is one paragraph so try to give many small paragraph the more paragraphs you will give the more visually your answer will be appealing and the examiner can track the number of points. Ideally, you should leave one line between each paragraph and try and avoid using bullet style of writing. Very rare. Under exceptional circumstances, you can use bullet style, but generally adopt paragraph style or a heading and paragraph style. Okay. High focus on formats like the report, the briefing note, the presentation. You have seen in the last 3 days how I make the formats, how I am so particular about bold, centering, heading, underline, giving spaces between paragraphs. It has to look sexy. There is no other shortcut about it. Look for stress words like extremely, significantly, notably in the exhibits and if you come across these sentences which has these words try to use those sentences in your answer use of models is not mandatory so please take advantage of this if you don't know the model or if you think that you might get stuck in between the model then just use some broad headings just make sure your answer is logical do not stress over by not using the model when you are specifically asked to give recommendation then your recommendation should be supported with justification normally we avoid conclusions or recommendations okay unless the question specifically asks so if the question asks to give recommendation then you must explain why you are recommending what you are recommending and then sometimes one requirement asks for two things so one requirement in one sentence asks for two things. So try to give two separate headings for each requirement. For example, this one says assess the role and value of non-executive directors. So it's actually talking about two things, role and value. Correct? These are two separate things, role and value. So I would expect you to talk about role. You can give us heading role of NEDs, give one or two or three roles, and then give another heading called value of NEDs. Value means the advantages. Okay. So similarly, look at another example. Draft a memo which discusses the ethical and reputational concerns. Again, ethical and. So I would expect a small heading called ethical concerns, and followed by a small heading called reputational concerns, okay. And lastly, ask you to identify weakness and recommend improvements, or it says to identify risk and recommend mitigation factors. Use a tabular format like we did yesterday. All right. So any questions for regarding the format and the presentation of your answer, the beautification side? Let me go through the question box. Can we make a hybrid model such like using Porter 5 and adding your own points? Yes, yes, yes. The paper is not about models. The paper is about logical, sensible answers. So as long as your outcome is sensible answer, you will get marks. Voice is breaking in between. My signals are showing perfectly fine right now. I will again ask admin to check, and where is the question box? Here. Okay, what else? More questions. It's fine for us. Yes, the noise voice is why two times press enter. Somebody is asking why do we need to press enter two times? My God, I don't know what to say. I said that there has to be leave some space between each paragraph, and how the hell would you leave a space between two paragraphs? You need to press enter two times. Please ask some sensible questions. I'm so sorry to be rude, but uh, sorry guys. Sometimes I really get pissed off by such questions. Uh, can examiners specifically say use this model? So far, I have not seen any question which specifically restricts you to a particular model. It's all right, son. It's all right. All right. So one requirement asks for two things. Should we divide total marks by three? No, no. You divide total marks by two because you will give separate points for each heading, right? Okay. So now let's move on. Internal control. So yesterday we talked about risks, right? So what is the meaning of risk? Can you guys remind me? What is the meaning of risk? Can you please tell me the meaning of risk? Just a second, guys. I dropped my pen somewhere. Just just give me a minute. I dropped my pen somewhere. Okay, got it. So risk is something, a futuristic event which can cause damage to the organization, right? And we all know that we have to protect ourselves from the risk. So how do we protect? So one of the very important thing is to implement proper controls. So if there is a risk of fire, there is a risk of fire. So don't you think there will be some controls like no smoking and when you go to a petrol pump, you will see all these precautions. Shut down your engine, do not stand and smoke there. There will be fire extinguishers. So these are all controls which are implemented in order to mitigate the risk. So what is the meaning of internal controls? It is a network of systems established in an organization to provide reasonable assurance that organizational objectives will be achieved and that assets will be protected. You're running a business, you're not running a jungle, right? So everything process, some control, some structured way, a disciplined way of things. So internal controls are a system of overall environment in which the organization it operates, right? So internal controls, what is the objective of internal controls? To make sure that organizational objectives are achieved, assets are safeguarded, the risks are mitigated, all those things. Now, what kind of questions should we expect for internal control? And before I talk about that, internal control is also one area in which there is a question in each and every attempt. 80 or 90% of the time, there is always a question on internal control. So if you want to focus on top 3 areas which are tested in each and every exam, it is 1, a financial question, 2, a question on risk management topic, and 3, a question on internal controls. So what kind of question can come in internal control? Generally, they would ask you to identify the weaknesses and recommend improvements. So we have discussed this earlier that we will follow a tabular approach. We'll give weakness on one side, recommendation. We will follow 4 marks for one weakness. Okay, and it is a common sense question. There is no chapter which is going to tell you how to identify a weakness. You will be given a story, and by common sense, you will need to identify any weakness. For example, in one of the case, it was said that our procurement department, they do not regularly compare the prices in the market. Is that good or bad? So I repeat, our procurement department do not regularly benchmark or compare the prices in the market. It's bad, right? It's a weakness. So what's the impact? So if my procurement department do not regularly compare the prices we pay to our vendors with other suppliers in the market, what's wrong? Why do we say it's a weakness? What's the impact of this? Please let me know. लेकिन रेड सिग्नल्स आ रहे हैं somewhere. आ गई? हाँ अब बढ़ रहा है. It's improving. Yeah. Okay. Guys, can you hear me now? Can you hear me now? Okay, thank God. All right. So we were talking about that if it was said that the purchase department do not regularly benchmark the price with other competitors. So what's the impact? What can go wrong? And I was getting such fancy, complicated answers that we will lose customers. How do you guys expect to pass? These guys start thinking like a CFO, not like dumb students. So if I don't benchmark my vendor prices, what can go wrong? Try one more time. So if I'm constantly buying from one supplier and I trust him, I am not checking out the market, I'm not comparing his price with anyone else, what can go wrong? Just tell me very simple stuff. Don't use sexy words like operational risk and this and that. This is not a risk management question. What can go wrong? I might be overpaying. How do I know the price which I am paying is right or wrong or high or low? In order to keep my costs very, very low and very, very competitive, my purchase department has to compare the prices very regularly. They have to take advantage of any discounts or deals being offered by someone. How do that's the whole job of a purchase department, to constantly keep comparing the prices. How can you miss such simple things? Somebody has brainwashed you guys that SBL is so complicated that you just are not able to see a simple answer. You all think that this is a very complicated question with a very complicated answer. Why do you guys are saying losing customers, losing competitive edge, losing high operational risk? Just say that the impact is we may end up buying more costly because there is no way of comparing our prices. That's it. All right. So what do you recommend then? That it is that the purchase department should regularly survey the markets, obtain prices from multiple vendors in order to make sure that whatever price we are paying remains most competitive. That's it, right? In one of the case, it was mentioned that the audit team does not visit the suppliers to spot check, or the audit team of the company does not visit supplier premises on spot checks to see the production process. Is that good or bad? So if we are, if we have outsourced our production, should we do spot checks? And spot check means I should randomly go there and check whether those buggers are working as per the instructions and specifications I have given, right? So if we do not visit or do spot checks, what's the impact? And this time, guys, don't piss me off. If we don't do surprise visits to our manufacturing companies, what can go wrong? Then exactly, that's better, guys. If we don't do surprise checks to our, manufacturing partners, there is a high chance that they might not be following the specifications or instructions we had given. They might not be, the quality might not be as we had told them. All these things. Maybe they're using child labor. Maybe they are not using proper health and safety measures. Something goes wrong there, it might affect my reputation. So whatever is the contract and the terms of the contract regarding quality, safety, work environments, I have to visit them on a surprise basis to see whether all those are being followed, right? Very good, very good. What do you recommend? If this is a weakness, what do you recommend? Simple, that the audit team should make it part of their routine to make surprise visits to all the vendors. Very good. That's it. This is the kind of questions the examiner asks, where he asks you to identify a weakness. A story will be given, and you will need to use your eyes and common sense to identify the weakness. Talk about the impact, that why you are saying it's a weakness. You have to justify, and then you have to give a recommendation. So if you don't have common sense, guys, you will not be able to handle an internal control question. It is as simple as that. So please up your game. If you haven't studied SBL, that's fine, but at least you have to be smart with average or above average smartness and IQ, which is required from a CFO. I don't know my IFRS, but I know how to ask questions, right? So that's the game. What is internal audit? So again, I'll go back to this one. So when there are internal controls, now how do I know? How does I know that these controls are working properly or not? Do you think there is a chance that internal controls may not be working as intended? What do you say? Do you think there's a chance that internal controls either might be ineffective, or they might be redundant, or people are not following them and the controls are not effective as we originally thought? That's a high risk, right? So how do we manage that? Then there is an internal audit department whose job is to make sure that the internal controls are working properly throughout the company. Okay, so internal audit is an assurance function within the organization to ensure that governance processes, risk management, and internal controls are working effectively. They are basically the eyes and ears of the board of directors. The board uses internal audit to go out and check whether all the controls are working as intended and the people are strictly following them or not. Okay, and then audit committee. What's audit committee? Audit committee is responsible to ensure that internal auditors remain independent and financial reporting. So now how do we make sure that internal audit is doing its job properly? There's an audit committee whose job is to make sure that the internal audit as well as external audits are working properly. Do you understand the big picture? So, so the big picture is there is risks, and where there is risk, what do? We implement internal controls. How do we know internal controls are working? We have internal audit. how do we know these guys are working? We have audit committee. That's the simple game. They are levels after levels after levels of control and governance. That's how the board controls the organization. So in my company, I'm the CFO, right? I sit in the board. If something goes wrong in the company, we as a board are responsible. So how do we make sure? We are a large company. How do we make sure that nothing goes wrong? There's an audit committee, there's an internal audit, and these are my control mechanisms, okay, through which we make sure that nothing goes wrong and risks are mitigated. Right. So internal audit, we just discussed the what is the role, the importance. You can go through these slides later. So, should all organizations, do you think all organizations have internal audit function, or some of them have it? Does all organization have internal audit function? No, correct. So how do they decide? How do organizations they decide whether they should have internal audit or not? Because having internal audit, although there are advantages, but there is a cost as well, right? No, the internal audit doesn't work for free. So what are those factors based on which we decide? First of all, we look whether there is any legal requirement or not. So for example, in a listed company, there is a legal requirement to have internal audit. Khalas. Then there is no other argument around this. If you are a private limited company, then there will be no legal requirement. Then maybe you can look at the size of the company, the complexity, and the growth of the organization. You can look at the risk levels. If you feel that risk levels are very high, then yes, the internal audit should be there. You can look at the number of employees. If there are many number of employees, or the geographical dispersions, like we have multiple locations or overseas locations, then yes, we should have an internal audit. Centralized versus decentralized. So the more decentralized, the more scattered you are, the risks will go up, and hence there's a justification for internal audit. The quality of the systems and internal controls, the frequency of frauds, and lastly cost benefit consideration. So many things, based on this you can suggest whether we need internal audit department or not. Audit committee is a board committee, right? And what is their core job? This is important, okay? The core job, this one. So they look at the financial statements. So their primary job is to make sure that financial reporting, financial statements are accurate and reliable. So the shareholders, what do they get? They get annual reports, they get quarterly reports, the investors, so all the stakeholders, they receive reports, right? So the accuracy of financial information is very, very important, and it is the role or job of audit committee. Right, so me as a CFO, I'm responsible for preparing the financial statements, and the audit committee, I'm part of the audit committee. The entire audit committee will review the statements and they will sign off that okay, it looks good, okay. And then internal audit function is the responsibility of audit committee. External auditors is the responsibility of audit committee. Whistleblowing arrangement is the responsibility of audit committee. Very, very important committee at a board level, okay. What are the advantages of having audit committee? Exactly the same advantage as having a separate risk committee. Do you remember we yesterday discussed the advantage of having a risk committee? If you have a separate audit committee, it will be more focused and more specialized. More time can be spent. Board can spend more time on strategic matters, higher involvement of NEDs, and higher shareholder confidence. There is one important thing. This one. Yeah. All members of NED of the audit committee have to be NEDs. All members of audit committee have to be NEDs, which means 100% members of audit committee have to be non-executive directors. That's a mandatory requirement, with at least one NED having expertise in finance and audit. It is not necessary that all the members should be finance professionals, but at least one member has to be a finance professional, if not more. Okay, I'll take some questions before we move on to the next topic. I think it's pretty simple, huh? Internal controls, internal audit, and audit committee. What is meant by recent expertise? Yeah, less than 3 years, 4 years, 5 years. Yes, correct. Same concept as F8. Yes, that's absolutely correct. What should be composition of risk committee? Just people who knows about risk, who can give time and they understand risks. In my company, how many members are there in audit committee? Three members. All right. Now, some important stuff, professional code of ethics. I know that all of you, or rather most of you, knows what this means. Professional code of ethics. But what is the meaning of the word code? Code generally means written guidelines. Okay. Professional code of ethics means it's a written guidelines issued by a professional body. You understand the concept of the word professional code of ethics? A professional code of ethics is written guidelines about some do's and don'ts issued by a professional body. Professional body can be an accounting body. It can be also used in engineering council, even doctors. So my wife is a doctor. She is bound by the professional code of ethics issued by Doctors Association worldwide. So all professions, all professionals who is a qualified person, it is mandatory to follow the professional code of ethics issued by their institute. So I am a chartered accountant from Pakistan. So it is mandatory for me to follow the professional code of ethics document issued by the Institute of Chartered Accountants of Pakistan. Right? And interestingly, all the codes are almost the same. They all talk about the basic ethical principles: integrity, objectivity, professional competence, confidentiality, professional behavior. So as a professional, if I am a qualified accountant and as a good human being also, but especially, you think as a CFO should be honest? So integrity talks about honesty, being straightforward, being truthful, should not conceal anything wrong, should be fair. You think as a CFO, I should have these traits or not? Should I be honest? Let me see. Let me take some survey opinion. You want me to be honest on my job? Why? You know, I sign checks. I have a signing limit of $1 million. So why don't I just do one little thing, one little fraud, and go retire in one of the island in Bahamas? Yes. So first of all, it is ethically wrong. Second of all, I am bound by the professional code of ethics of my institute. If I am found doing a fraud, or I am not honest or truthful or concealing anything, I will lose my professional license. Yes, it will be a big breach of my. So I think you understand the concept, right? Similarly, objectivity means that my decision should be based on facts. I should not be biased. No conflict of interest. Very, very important. So, I am selecting a vendor to purchase some IT equipment. I need like 50 laptops for my company. 50 laptops. I have got 5 quotations. And one of the company is owned by my ex-girlfriend, or maybe my present girlfriend. Who knows? Would she try and please me and ask me that, listen, honey, this contract should come to me? The prices are the same. So as a CFO, I'm not cheating. Her price is similar to another vendor, but because she's my girlfriend, can I give it to her? Let me see your views. Or forget about girlfriend, she's my wife. Okay. No, no, never. Even if the price is same, okay, if the price is higher than others, but she's my girlfriend, or she's my future girlfriend, I'm interested in her, should I give the contract to her if her price is higher? No, right? But if her price is similar or lower and she is related to me, no, no. Because if there is any kind of conflict of interest, my influence, I am, if she's my wife or she's my girlfriend, I am influenced, right, indirectly, then no. No kind of conflict of interest is acceptable, even if the price is cheaper. Then I would just go to my CEO and I will tell him that, listen, CEO, Mr. CEO, in this tender, although the price is lowest, but the owner, she's my girlfriend. So I think I am not the right person to sign off, because if tomorrow someone finds out, I am screwed. So better someone else takes this decision. All right. So I'm just telling you that these are the kind of things, just I'm invoking your thought process. So professional competence, all this I have to follow as a CFO. And if I don't follow this, I will lose my license. Okay. Now, another thing which I as a CFO need to follow is protect the public interest. Because I am a qualified accountant, I am a qualified professional, it is my duty, it is also one of my duty to make sure that public interest is protected. Now, what do I mean by that? So, of course, I have to protect the interest of shareholders, right? Because I'm working in an organization. The purpose or the mission of the organization is to maximize profit. And the shareholders have hired me, they are paying me salaries, I'm an executive director. So my primary duty is to fulfill shareholders' interest, right? Or protect shareholders' interest. That's my primary thing. Don't get me wrong. But Should I mix some harmful ingredients in the product which I know will make some customers die just because I want to maximize the profits for my shareholders? Did you understand the question? Should I mix some harmful raw material which I know will cause damage to the health of my customers? But let's do it because it will double my profit, and my primary responsibility is to the shareholders. I don't give a shit about customers. Is that correct? Is that ethical? No. Wow, wow, Rakib, wow, wow. No, man, never. Always God is up there, right? If nobody is seeing, doesn't matter. My own conscience is seeing me. Yes. So I need to draw a line. The moment I feel that shareholders are getting unethical, at the moment I feel that shareholders are crossing the line in their greed to maximize profit, I need to raise a red flag. So when we say, I have to protect the interest of the public interest, basically it's simply I just have to make sure that the interest of these people are not compromised, they are not injured, or there's no fraud with these people. So I have to make sure that my employees, so when we say public interest, it includes employees, it includes customers, it includes suppliers and society in general. So as a CFO, if I know that if the company is doing something, if the company is doing something illegal or something unethical, which is gonna affect these people, I need to do a whistleblowing. I need to go inform the chairman, or maybe my regulatory body, or maybe my professional body, or seek legal advice, whatever. But it is my duty as a qualified accountant to make sure that public interest is not compromised. Okay, very good. Another one is corporate code of ethics. So the first earlier one was called professional code of ethics. It is issued by professional bodies and it is mandatory for the members of that professional body, right? Now a corporate code of ethics is issued by organizations and it is mandatory for all the employees of that organization. So corporate code of ethics of Amazon or Facebook is not it's not mandatory for you or me, right? But it is mandatory to follow for all the existing or maybe the past employees of Amazon or Facebook. So all these big organizations, they also publish their own corporate code of ethics in which they all talk about these sensitive areas or gray areas or ethical areas. There will be a big section on employees. There will be a big section on customer, suppliers, society, all these things. Working conditions, health and safety, gender equality, no discrimination, diversity, product quality. So all these are, the gray areas where organizations, they kind of publish their own corporate guidelines so that there is no ambiguity or confusion. All employees need to follow that. Let me take some questions. These are pretty straightforward. Interesting or not? I know you're joking, Rakib. Is it interesting or is it boring? Yeah, it's nice, right? And you know what? When you become a professional, it's kind of easier said than done. All these things when you face in practical life, sometimes you have to make some difficult choices. I need to let go of my sexy girlfriend because of conflict of interest. So you know what I said? She said, give me the contract or I am no more your girlfriend. And I said, okay, you're no more my girlfriend. Bye bye. Okay. Let's move on. Let's move on. Listen, guys. All this discussion stays between us, right? If, no way my wife should find out. Okay, promise. Okay. Now something called integrated reporting. Have you guys heard of this integrated reporting? Do you know what that is? Any idea? I picked this topic because I feel that it is a tricky topic, and a lot of students they don't understand this topic. And my expertise is to make complex things simple. So I'll try and explain to you at IR in a very simple conceptual manner. Right. So integrated reporting. So let's start with something called. Wait. Let me open. Come on, man. Yeah. All right. So we all know as accountants, we all know that there is something called financial statements, right? Absolutely. And we issue quarterly financials, half yearly or annual financials. It is one of the key documents which goes to the shareholders and stakeholders and potential investors and the regulators. So financial statements or annual reports is the basically main source of information for outsiders, correct? But then there are some limitations or drawbacks of financials. Can you think of two or three drawbacks of a financial statement? Especially think from a investor point of view. So supposing you have like $10,000 and you want to invest in some shares, some equity scripts. How would you decide which company to go for? Obviously, you will look at financials. But I think there are certain drawbacks or limitations of financial statement. Let me see. Very good, guys. Very good. So the biggest drawback, correct? All of you are bang on. So the biggest drawback it is that it is historic. It is historic. Like financials is about last year. It's gone, it's history, it's previous, which means that it is not forward looking. That's one of the biggest drawback, that it talks about the past. So in the past, the company was really profitable, but does that guarantee that the future profits or dividends will also follow the same pattern? No. As a potential investor, if I'm looking for the right companies to invest in, I am sure interested in the history or the trend, but I'm more interested in the future projections, right? No? Okay. The second one is it focuses mainly on finance, on numbers, financials. Obviously, it's a financial statement. It will just talk about financials, correct? But as an investor, yes, I'm interested in financials, of course. But I need to know a lot of things like future plans, what are the key strategies of the company, SWOT analysis, all the business aspects as well, because if business aspects are good, then financials will be good. Got it? So these are the drawbacks. So in addition to address the drawback, a new kind of report was introduced like 15 years back. It was called integrated report. So here's the difference between the two. So a financial report statement focuses on financial information, but an integrated report, it focuses on business performance overall. Like it includes financials, but it also talks about non-financials, historic performance, future strategies. Focus on share capital, and in integrated reporting, there is a concept of 6 capitals, and we will talk about it in 5 minutes. Less emphasis on social and environmental aspects or activities of the organization. So you know that today's age, a lot of emphasis is about social and environmental activities of the organization. People want to see how much you contribute or how much you are active in social and environmental responsibilities. But a financial statement does not really focus on social and environmental activities, right? But IR, they'll focus a lot on social and environmental activities, short term, historic, this is long term. So there's a stupid definition which you will need to memorize, I believe, because this definition is issued by the Integrated Reporting Standard Board. What will be the contents of an integrated report? Again, there is no hard and fast content, but generally you would expect to see the overall overview of the organization, the analysis of external environment, you will see SWOT analysis, you will see aspects about value creations, future plans and strategies, key risks, 6 capitals, social and environmental initiatives. All of this you might not see in a financial statement, or very, very limited or diplomatic stuff. But in an integrated report, that really focuses on all these things. So when we say 6 capitals, in the scope of integrated reporting, they say that an organization has 6 capital. The first one is financial capital, obviously. So financial capital means that we need to look at the financial performance of the company. Obviously, that's such important thing. So on the usual financial statements, that's part of financial capital. Then it says the second capital is manufacturing capital. Manufacturing capital talks about tangible assets. Okay, it talks about tangible assets, which includes non-current assets as well as current assets. The third one is intellectual capital. It is obviously intangible assets like research, brand, patents, technical stuff. The fourth kind of capital which IR talks about is human capital. Obviously, it talks about employee related matters like their knowledge, their skills, their experience, productivity, efficiency, staff turnover, satisfaction surveys. The fifth one is social capital, and which talks about customers, suppliers, society, government. And sixth one is natural capital, which talks about the ecological aspect like CO2, carbon, recycling, pollution, and all those things. So essentially the same, but there's some fancy terminologies. 6 capitals sounds sexy, right? 6 capitals. Okay. What's the advantage of integrated? Now, first, what's the disadvantage of integrated reporting? Why doesn't every organization they publish IR? Because too much commercial information or strategy is disclosed. Why would I want to, if I'm a commercial organization and I have like cutthroat competitors, why in the hell I would want to disclose my future strategies, my analysis, my plans? Do I want the competitors to copy it and then kill me on that? No. That is why IR is not really used by commercial organizations, right? And secondly, the valuation of six capital is quite subjective in nature. So, for example, how would you place a value, a monetary value on employee capital? How would you place a monetary value on social capital? These are all subjective things. So, how would you put a monetary value? Just some fancy stuff. But then there must be some advantages as well, right? Because half the world is now moving towards IR. It is a voluntary disclosure, and hence it enhances the image and reputation for transparency, effective communication with all stakeholders. It demonstrates how organization, plans to maximize its wealth in future, focuses on social and environmental thing, talks about six capital, da. Which organizations they issue IR? Normally charitable organizations, government organizations, not for profit organizations. They actually go towards IR because charitable organizations, they want to make sure that their donors are happy. They want to look transparent so that they can get more donations. Government organizations, they use IR because they want to be transparent to the public. Not for profit organizations, they don't have any competitors, so they would like to disclose a lot of stuff on this. So in the previous June webinar, I actually solved one question. So far there is one question in your past exam on integrated reporting. It was about analyzing the six capitals of an organization. So in June webinar, day number 3, I have actually solved one proper question on IR. So I would strongly recommend that you guys tonight or tomorrow go back to day 3 of June and practice a question on integrated reporting. It is just asked once, so it's better to do it. Right. Any questions? Let me go through the questions. Skilled employees, which capital? It depends. If they are highly skilled, then I would take them into intellectual capital. And if they are just usual skilled, like carpenter or plumber, I would take them as human capital. Is IR expensive? No, it's just a report. It's not an activity or some project. It's just a report. You just disclose the relevant information in a document. So it's not very expensive. What is integrated thinking? Good one, Ahmed Kamal. So what is integrated thinking? I have no idea. Because in the exam, the examiner asked to talk about integrated thinking. So you will need to make a guess. Integrated thinking, integrated reporting. So I will just talk about integrated thinking is all these things that, the thoughts about futuristic, the business strategies, social and environmental activities, how we create. This is integrated thinking. And then where it is documented in a report called integrated reporting. Yeah, it's just, do we get IR audit? Yes, IR audit is done, but it is very very subjective. So it's just kind of an eye wash. You cannot actually rely on IR audit because it's a lot of subjective thing. Ah, I remember something. Do you know ACCA? By the way, do you know ACCA is a non-profit organization? Do you know that? ACCA is a non-profit organization. So they do, even if they are charging so much and they are making profits, they do not exist to make profit. So they are non-profit organizations. And because they are non-profit organizations, they don't commercially compete with other bodies. Okay, so that is why ACCA, they have been publishing not financial statements but integrated statements. ACCA has been publishing, they adopted like integrated reporting several years back. Okay, so let me show you the integrated report of ACCA. It will be very interesting just to give you an idea. So again, there is no hard and fast format. There's something wrong, guys. How the hell do I type? Just a second, guys. Right, guys. Sorry, there was some problem with my keyboard. So where was I? Let's look at ACCA's integrated reporting. This one. So I'm just opening ACCA's integrated reporting for the year 2020. That was the last available. Okay. So I'll just quickly go through it. Okay, I'm not going to explain everything because just to give you a real idea about how a IR report looks and ACC, what better example than ACCA's own IR. So look, does it look sexy? Integrated report 2020, nice. About ACCA, okay. And then they are saying our purpose, our values, da da da. Okay, about this report. Okay, our highlights. So they are giving some KPIs: satisfaction, employers, majority in the 6 major awards, online, computer based. Oh, who's this? President's massage. Oh, no, no, no. It's president's message. Sorry, is she the president? Nice. Aha. Do you guys see a male or a female? Very good. You know what I'm trying to say? Gender. So they have a female president, gender diversity. And again, a good point. And where are you from? Anne is saying Asian female. Very good. That was my point. That even within female, she is not the British kind of a person. She is one of the Korean. She's Indian. No, 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 no. She's not Indian. I think she must be Korean. Okay, that's your homework. So female with the ethnic background, like an Asian or something. Nice. Value creation model. Okay. This is how ACCA creates value. Some sexy, nice looking graphs and information. Now, who's that? Whoa, chief executive. No, they even have a female chief executive. So the president and the CEO, they are two different people, and both of them are females. That's gender diversity at its best. The top two positions are held by females. Yay. And then it talks about CEO's strategic report. So she's now talking about all the key strategies, past, present, future. Now, a commercial organization will not give that much detail, right? Oh, something about COVID, introduction of COVID, Russian language exams successfully launched. Whoa. And then areas of critical strategic focus, impacts on targets and budget. Now, who would talk about targets and budget? Not a commercial organization. Our global context, and 10 disruptors. So these are the risks. The disruptors means, potential risks. So technology, COVID-19, continuous learners, digitalization, blurring of competitors, growth of Asia. So again, it is not like a financial report. It doesn't focus only on financials. It's giving the investors, the stakeholders, a all-rounder picture. Stakeholder engagement, that's like social thing. Government, students, you can go through this report at your own time. And some sexy looking materiality metrics. I don't know what that means. Strategic performance, some graphs. I'm looking for something else. Strategic performance. Where is their environmental and social footprints? I don't know whether, okay, let's skip that because but did you get an idea? Like integrated reporting. The whole idea is to provide a good picture to what happened. Shit. Can you guys hear me? Are you guys there? Just a second. Are you guys there? Just let me check. I think something went wrong. Okay, good. So are we clear on, where is my this thing? Yeah, here on integrated reporting. So now let's take a break here. Okay, let's take a break here. And then after the break, we will start with the corporate governance thing. So break. It is basically 9:55. So 10:10. Okay. See you after 15 minutes. Hi guys, I am back and I hope you are back as well. So if you can hear me and see me, please can I have a yes? Nabil, no, you will cover both part A and part B together. Right, so now let's start the corporate governance thing. And again, it is a little bit boring, but I will make it interactive and simple. So we all know that in a company, especially a listed organization, there is a board of directors, and the board of directors basically has four people or four positions. The one will be a person called chairman. Another position is basically the CEO. The third kind of people on the board are called executive directors. And the fourth type of people on the board are called non-executive directors or NEDs. So a board will always comprise of these four type of people. So first of all, are you guys aware of the concept of executive directors versus non-executive? The word executive versus non-executive. Do you know what it means? What is an executive director? Right. So executive director, it simply means that that director is an employee of that company and he is getting salaries and benefits and bonuses just like any other employee of the company, like he's a permanent employee or a full-time employee of the organization. And the word non-executive is used for, yeah, just like me, absolutely. And the word non-executive is used for those directors who are not the employee of the company, neither full-time nor part-time. They are not employees. They are like consultants, okay? But don't quote me, but they're not employees. They are outside directors and they get some fixed fees for being, a director, because obviously they are devoting some time, they are responsible for certain things. So why would anyone do for free? So like non-executive directors are outsiders, meaning that they are not employees of the company, they are independent. However, they do get fixed amount of fees. They are not entitled to any salaries or bonuses or perks, but they just get some fixed fees, normally decided by the law of the land. The fee should not be very low and it should not be very lavish. So it depends on country to country. Right. So my next question is, CEO normally is executive or non-executive? So CEO is an executive position because it's not a voluntary position. All the CEOs in the world, they are salaried full-time employees. Okay. There might be a couple of exceptions here and there, but by and large, CEO is an executive position. Similarly, me as a CFO or finance director, it is my job. I'm an employee. It is my source of income. Similarly, the marketing director, the HR director, the IT director. So all those full-time working directors, they are executive directors. And non-executive directors, are the visiting or independent directors who do not own any permanent position or designation within the company. Now, I have a question for you. This guy, chairman, is executive or non-executive? Let's see. Chairman is executive or NED or ED? Yes, mostly NED. Very good. Like a CEO is chairman is by and large is supposed to be a non-executive, but there are exceptions, but by and large, mostly non-executive. Okay, chairman is generally non-executive. The second question is, these two guys, chairman and CEO, you think they should be the same, these two roles should be done by the same person, or they should be two separate persons? Now, why do I ask that? Because in a family owned business or a private limited company, mostly family owned business, the chairman and the CEO is normally generally the same person. So Mr. Dad is the chairman and he's also the CEO, but that's generally in private limited or family owned. That is, so it is possible that chairman and CEO can be one person. But what do you prefer? Should that be a two-person? What is better? Like in a listed company? Yeah, separate is always better. That is why in a listed company, it is by law, it is mandated that the role of chairman and CEO has to be done by two separate persons. So what's the reason? What's the justification? What's the advantage of having separate persons? Yes, very good. Segregation of duties. Very nice. Maintain independence. Very good. More accountability. Balance of power. I like that. Balance of powers. Because if same guy is chairman and same guy is CEO, all the powers are vested in that one person. He can screw your life if he wants, right? What about challenge? Like if it's the same person, who would challenge the CEO then? Would you challenge the CEO? No, I don't have the balls. So someone more senior will need to challenge the CEO, right? So generally, if the role is split, the chairman has the balls or the guts to challenge the CEO if the CEO is talking rubbish or not performing. And other directors can also talk to the chairman if they have a conflict or some dispute with the CEO. So there are lots of advantages. Right. So this can be a good topic in the paper. So mainly what is the role of chairman? Just remember that the main role of chairman is to run the board of directors. And the main role of CEO is to run the day-to-day affairs of the company. These are two very different roles, and both of them are like a full-time role. And these are the advantages of splitting the role: segregation of duty, chairman able to challenge, other directors and can communicate, higher shareholder confidence, and balance of power. Okay, right. The next topic is NEDs, non-executive directors. So you already have an idea that these are directors who are outsiders. They are not employees of the company. They are supposed to be independent. So they get a fixed fees for being NEDs. Why? Why they do not give any salaries or bonuses? Because it will create conflict of interest. It will affect their independence. So then if they also get salaries and cars and girls and secretaries and bonuses, then what's the difference between them and executive directors? So it's a very important distinction. Now, what do they do? Why do we need, no, sorry, what do they do? Why do we need, we'll talk about an advantage. What do they do? They mainly contribute in strategy, discussing strategies. Why? Because they have external experience, they are outsiders. They are generally, we hire people with experience, seasoned senior people. So we have expert access to outsiders experience. They can share their experience. And then second thing is they scrutinize the performance of executive directors. So who's gonna review whether the CEO and the rest of the directors like myself and IT director, marketing director, are they working properly? Who's gonna review us? The shareholders don't have the time or the expertise. So it is the non-executive directors whose job is to review the performance, include the main person is the chairman, assisted by the non-executive, that they review the performance of executive directors. Third main role is risk management. They have to make sure that they need to independently assess that there is sufficient internal controls, risk management in place, so that they can give confidence to the shareholders and assurance to the shareholders, because executive directors are somewhat biased, right? We are the employees, we are the insiders. So these outside independent guys, if they give some assurance to the shareholders, that carries a little bit more weight, not little bit, significantly more weightage, right? And then people like nomination, remuneration, succession planning of executive directors. So who decides my salary? Who decides how much bonus will I get? Ideally the shareholders, because they are the owners, but they don't have the time or the expertise, so they leave this job in the safe hands of non-executives. So a non-executive has very important role to play. What do? Like they contribute in business strategies, they scrutinize the performance of executive directors, they make sure that there are proper risk management and internal controls working in the system, in the company, and they look at the appointment, the remuneration, and all those things of the executive directors. What are the advantages of having? Obviously, they bring more independence, adds to the shareholders' confidence, they have external experience, they scrutinize the performance of CEO and CEO. Employees can discuss confidential matters with NEDs directly, like whistleblowing or something, and compliance with regulatory distinct requirements. How frequent NED come to office? There is nothing hard and fast, but at least they come to attend the board meetings, and if required, if they are part of any the committees, then they do. So I think maybe around 8 to 10, 8 to 12 times a year, they are definitely there. Can a NED in one company be a executive director in another company? Absolutely yes. Why not? This is called cross directorship. Number of NEDs. Oh, someone is asking what should be the NEDs and EDs should be equal. What do you think? So again, the quantity or the number of NEDs depends on country to country. Like in the US, the law says that NEDs should be more than 50% of the board. How much? More than 50%. That means they will be 51% or majority, right? So if there are 10 directors, then 6 has to be NEDs because the law says more than 50%. In Singapore, it says NED should be at least 1/3 of the board. And UK, they say they don't specify anything, but they say that UK says that there should be sufficient number of NEDs in the board, sufficient, so that their views can be listened to. NEDs receive management report, of course. Otherwise, how would they know what's happening? How would they scrutinize the performance? Yes, Karthik, you are right. What's the difference between independent director and NED? Same thing. Is it appropriate for the chairman of a board to receive salary like other employees? Yes, it's a very exceptional case. It's not by and large. Isn't cross directorship disallowed? Yes, it's not allowed. It conflicts. It is a conflict of interest. No, Usman, I don't think so. You're right. Who reviews the non-executive? Good question. Hi, Gulkan. Gulchan. Good to see you. Who reviews the non-executives? I don't know. Chairman and maybe the CEO, maybe the shareholders. Do ED and NED change every year? No. Every year is not practical, but the rule of thumb is 3 to 5 years. So their appointment is for either 3 years, between 3 to 5 years, depending on the entity. Yes, Gulkan. All right, I think we are good. So the word independent is very important, right? So what is the meaning of the word independent? There are several scenarios independent. So I have given this list here on the next slide. Independent means that he should not be an employee of that company since last 5 years. There should be no business or financial relationship. He should not be an NED in the same company for more than 9 years. That's important. So the person should not be NED in the same company for more than 9 years because the law feels that after 9 years there is a familiarity threat or there might be some friendships. Should not have any close family ties in the board. No family members in senior position. No share in profit or share options of the company. Okay. All right. So now board committees. So there are basically 4 board committees. It is called nomination committee, remuneration committee, audit committee, and risk committee. So remuneration committee has 100. It is mandatory that remuneration committee should comprise of only and only non-executives. Similarly, audit committee should only have 100% of NEDs. So these 2 committees, audit committee and REM committee, it is mandatory that only non-executive directors will be in this committee. No paid director can be part of this committee. Can anybody tell me why? So what does a REM committee do? They decide the remuneration of executive directors. They decide the bonus, the package, the share options. So why do you think executive directors should not be there on this committee? Yes, absolutely correct. So there is a very big conflict of interest, right? I think the chat box is again getting stuck. Yes, absolutely right. Conflict of strategy. Conflict of interest. What does a nomination committee does? Basically, they decide the size of the board, the composition of the board, like making sure that there is sufficient knowledge, skills, and experience available in the board. The balance between EDs and EDs, appointing new directors, training, succession planning. So the whole purpose of nomination committee is to make sure that the entire board of directors is up to date. They are sufficient knowledge and experience is available. It's working properly. All those things. So if a director retires, for example, if I resign, I'm an executive director. If I resign, so nomination committee would then get active and they would immediately try and replace my position with someone uh, acceptable, right? So nomination committee is responsible for appointment and making sure that the board is functioning. RAM committee, we already talked that it is responsible for deciding the salaries, the perks, the benefits, the bonuses of all the executive directors and other senior employees of the company. Audit committee, I think we discussed 1 hour back as well. Audit committee's main role is to review the financial statements, external auditors, internal auditors, and whistleblowing. Just remember these 4 things. And also, all members have to be NED with at least one member having recent expertise in finance and audit. That's a requirement. And risk committee, we can guess that risk committee is role is to implement risk management process, make sure that risk is embedded in the culture, identify key risks and recommend controls. All these things which we talked about yesterday, the risk management steps, identify, assess, likelihood, risk register, all this is part of risk committee's mandate. Now, what are the advantages of having committees? Why the hell do we have committees? So there's a full board already, right? So there is a full board of 1%, 2%, 3, 4, 5, 6, 7, 8. 8 heads sitting on the table. Why do we need subcommittees? Why can't the whole board do all these things? You understand the question? Why do they have subcommittees within the board? Why can't the entire board do all these things? Yes, from the board, the entire board should actually focus on the core job, which is business strategies, taking the business forward, making sure that your revenue growth, profit growth, market share, wealth maximization, that's the core job. If the entire board starts focusing on nominations and remunerations and audits and risk management, then who is going to do the real job? And board has limited time, so they would prefer spending majority of that time for business development, right? And then certain committees, they require expertise. So for example, audit committee requires certain expertise, risk committee requires certain expertise. So having a committee, they will be more focused and more specialized. What do you mean? What do I mean by focused? So that if I am part of the risk committee, so then I will be actually focusing a lot on risk matters, right? If you are part of REM committee, you will be focusing a lot on the matters of REM committee. So obviously when there's a subcommittee, they will be more focused, more specialized. They can spend more time. They can meet more often because it's just a small group. And then it frees up the board. The board can spend more time on business matters, higher involvement of NEDs, increases shareholders' confidence. So these advantages can fit into any committee. The way I have drafted them, they will fit into any committee, okay? If the question says, what are the advantage of risk committee? Just reproduce this list. If the question says, what are the advantage of audit committee? Reproduce this list. If what are the advantage of RAM committee or nomination committee? Reproduce this. Okay, let me take some questions before I proceed. It's downloading, guys. Sorry. Yeah, it's there now. Why board has limited time? Okay, interesting question. Why board has limited time? So again, there are two type of directors, the executive directors and the non-executive. The executive directors like myself, I will be working full time, right? I am not going to sit in the board all the time. I have my day job, my desk job. I need to look payments, collections, receivables, reporting, tax. I don't have full time to sit in the board. Then who would do my job? So I have limited time. Similarly, the non-executive, they are visiting directors, so they have limited time. The board can't spend, they can't sit in the boardroom 365 days a year, right? Then who's going to do the work? Supervisory NEDs are always part of supervisory board in a two-tier structure. Yes. Is there any eligibility criteria for NED? Just common sense criteria. Like A, he has to be independent and should have sufficient knowledge and experience and skills. Yeah, that's it. Secondly, do audit committee and risk committee both works towards reducing the risk? Uh, yes and no. The primary job is for risk committee to reduce the risk, but audit committee does complement or support them because there are some overlapping areas. RS, you're absolutely correct. It was just to explain to the people. Who decides the pay of NEDs? It is by the law. I mean, they get fixed things. So companies, generally the law is guidance, but you look at industry standards and the company articles and memorandum also mentions some guidelines about it. I think it's mainly the chairman. Can chairman has power to challenge the decision of CEO? Of course, yes. Chairman is more senior than CEO. Doesn't the board decide to pay? Yeah, it is all collective, but in accordance with guidelines from the shareholders, from the boards, from the companies, policies and procedures. It's not a big deal. It's not a very complicated thing. I think in Pakistan, does anybody know in Pakistan how much is the fees which a board, which a non-executives gets? Or in India or anywhere, do you know for your country? Is there some benchmark? All right, let's move on. I got it. Now, remuneration and rewards of directors. Something very, very important. Remuneration should be sufficient. It should not be less, and it should not be excessively less, and it should not be excessively high. That's the whole thing. It should be ideal to attract, retain, and motivate competent people. That's the whole purpose of a good remuneration. So, do you remember my salary? I think I told someone on day 1 or day 2. Someone asked me and I was idiot enough to speak my salary. $20,000. Yeah, that's correct. So that's sufficient for you. Is it? Is that sufficient for hang on. Why is it getting stuck? Is it sufficient enough to attract you, retain you, and motivate you? Okay. But then also, there's another thing. So I get $20,000 per month, and I have a bonus of 200,000 per year, per annum. But this is linked with performance. I will not get this by default. I'm getting this by default every month, but this bonus is linked with performance. Can anybody tell me whose performance? Yours or mine? Yours or mine? Exactly. This performance is basically, this bonus is linked with two things. It is linked with company's performance as well as my own personal performance. Because I am a director, it is my job to make sure that the company makes profits. How can I get bonus if the company is making losses, right? That doesn't make sense. So the whole concept here, okay, let me clean the screen. Don't tell my wife my salary, okay? She doesn't know. I told her I just get $2,000. So the main second concept is the remuneration should be linked with performance. Never ever senior executives, they cannot get fixed salary. If in your exam, if you see that directors are getting fixed salaries, immediately raise a red flag. You know directors is supposed to get fixed salaries. A part of their salary has to be linked with performance. Okay, remember this very, very important thing. And then, so for example, my remuneration, I've got fixed pay. How much is that? Okay. Then I have got a variable or performance-based incentive. The incentive can be both short-term and long-term. So my bonus is this one. That's promised subject to my performance and company's performance. And then I'm also entitled to long-term incentives. So normally I also get share options. So 10,000 shares I get every year. but it will be, the exercisable date is after 5 years. So by 5 years, I will have 50,000 shares of my company free of cost, which I can sell after 5 years. So you see, the incentives are both short term and long term. Why do we need to give long term incentive to directors? Any idea? Short term is not enough. Because directors' job is to maximize company's wealth, and that cannot happen overnight. So that is why the long term, I can make my company very profitable by window dressing, this and that, but then next year will be bad, right? So that is why long term assessment, and directors cannot approve their own remuneration. Who approves their remunerations? It is by the remuneration committee. Any questions? Huh? Interesting slide, the remuneration. Very, very, I really like this concept. Yes, you're right. I realized later that I should not have disclosed my salary. I should have used the Google's CEO's salary as examples. So stupid of me. All right, move on. Insider trading. Very simple concept. Do you think that directors, especially the executive directors, they have access to confidential information? Yes or no? Do you think directors have access to confidential information? Of course, yes. So, for example, I'm the CFO, right? I have I know the company's profitability and all those things, whether the company is gonna be profitable or it will be in a loss this year. I know that as the back of my hand. So now if I want to take some personal advantage, I can play around. I can, buy some shares, or I can ask my friends to buy. I can give tips, right? This is called insider trading, meaning that insider, like I'm an insider, I'm misusing my authority and I'm misusing companies' confidential information to gain personal advantages. Is that ethical or unethical? Insider trading. Yes, it's highly unethical. In fact, it is illegal. So if I am found doing some insider trading, it's a criminal offense now. I will be jailed. I will be, I will lose my license. In fact, like few months back, CEO of a big global bank, he was arrested because of insider trading. Yes, it's a breaking of professional code. I was not honest. I broke the confidentiality clause, integrity clause, professional behavior clause. All those clauses are violated. Very good. So insider trading, no, a big no, no, no. Last topic before we do a question. Family owned versus a listed company. So in the world, basically you will see two broad categories of companies. One is family owned business, and one is a proper listed company. So we all know what a listed company is. A family owned is generally by nature it is a private limited company. When I say family owned, what is a private limited company? It is a company which is privately owned. It's not available for public. And privately owned is generally within the family, within friends. There are no outsiders. That is why it's called family owned or private limited company. So we need to understand the broad differences between a private limited versus a listed co. Oh, by the way, do you know that some of the world's biggest brands are family owned? Like, have you heard of this company? Samsung. Samsung, yeah. It's a family owned private business. Huawei. Huawei is a family owned private business. Nike, family owned private business. There you Google and you will see so many big names which are family owned business. There are no outsiders. Okay. So the biggest differences, let's talk about the biggest differences. A family owned business is generally owned by family members, obviously, and a listed company is owned by individuals or institutional investors. Lesser corporate governance requirements, stringent corporate governance requirement. We all know that listed companies have to follow listing regulations, this and that, and code of corporate governance very, very strictly. But a private limited, they don't have to follow listing regulations. The role of chairman and CEO is with the same person or can be with the same person. Mostly, yes, in a family owned business, but in a public listed company, the role of chairman and CEO has to be split. It's mandatory, non negotiable. Freedom of taking decisions. The board can talk, and then Mr. Dad just says, "Shut up, guys. We will do as I say," and done. Decision taken. But in a listed company, decisions are done based on majority shareholders or voting rights. Then very big difference. None or few NEDs with weak position. So there's no concept of NEDs in a family-owned business. They don't need independent outside directors. They are the owners themselves. But in a listed company, there has to be sufficient numbers of NEDs with strong positions. And hence, no board committees. Why? Because there are no NEDs. And here there has to be formal board committees. Less focus on internal audit risk management, high focus on internal audit and risk management. So these are the key differences. So do you think which type of company has more strong controls? Public listed company or private limited? Which type has stronger stringent controls? Yes, listed. Listed company will have tighter stringent controls. And what are those extra controls? As we said here, same thing. I just summarized those extra controls which you will always find in a listed company but not in a private company. What are those things? The role of chairman and CEO are split. That's done. That's mandatory in listed company. There has to be sufficient number of NEDs in a listed company. You won't see that in a private company. There has to be board committees. There has to be mandatory internal audit. There has to be whistleblowing. So all those things which here, internal audit, risk management committees, yeah, internal audit, mandatory internal audit, focus on risk management. So all these are those extra controls or things or activities which a listed company has to do, whereas a private company do not have to do this. So sometimes the examiner may ask that what are those extra things which you will find in a listed company. So this is the list. Any questions before I proceed to the last section? I think this corporate governance is pretty easy. Just some basic sense required. Sometimes the questions might get a bit tricky. Yeah, it's easy. I agree. The last topic is commercial acumen. My favorite is the professional skills. So commercial acumen. Acumen means sense. Commercial means business. So what does commercial acumen means? That you have to demonstrate to the examiner whether you have business sense or not. Okay. So we guys are accountants. So you think as a CFO should have some business sense as well, other than good grip over accounting, finance, and reporting? Do you think a CFO should also understand some business sense? Yes, no? Of course, yes. Because CFO is part of the board. He's part of the strategic planning team. How he would understand the other directors if he don't know jack shit about the business? So I feel that I have a very strong business sense and less accounting sense now. Like 10 years back, my accounting sense was more sharp and my business sense was weak. But as I start spending more time in strategic and board related discussions, so my business skills got more polished, and I slowly started losing my IFRS, my accounting entry skills. And that's why I'm getting 20K, right? So the SBL examiner wants to see whether you guys can demonstrate some business sense or are you dumb accountants. By the way, people, they don't like accountants. They think that accountants are very dry, very boring, very studious, no nonsense kind of people. So the examiner wants to see whether you are dry or you are someone bubbly and more into business and likes to look at the big picture. This is what you want. This is what you have to demonstrate: commercial acumen. Now it sounds fancy, but it is very easy. How can you score marks? Just by not talking like an accountant. That's it. So, for example, when the question says, what are the key advantages of this? So, if you start with cost savings as the first advantage or cheaper, the examiner will know that you are an accountant and not a business person. So always we will first talk about strategic matters, business matters. So I have made a small list of some words. So if you use words like customers, competition, market share, strengths, weakness, opportunity, threat, risks, technology, marketing, HR, strategic planning, goals, objective, all these basic business words which it's nothing, no word here is unfamiliar, right? So when we answer a question of commercial acumen, just don't talk like a accountant. And actually, you don't actually have to do anything in this. Just follow the case study, the scenario, use couple of words from here, and you are done. Not a big deal. Any questions? Wait, the questions are downloading. Yeah, it's there. I will never get married. Why? Okay. How much ACCA pay you and how much ACCA? Why would they pay me? Why would ACCA pay me for this webinar? Ha, peanuts. Honestly, peanuts. It is my half day salary which I get during the entire webinar. Don't remind me. All right, let's do a question. And I want to apply whatever we learned. So this is a very, we will do sub SBL actual paper called March June 2020, and the case study's name is TT4U. And those people who are resits, this was a very, very tough question. One of the most crazy papers of SBL history, TT4U. But don't worry, I'm there. We will do question number 3C. Okay. Now the thing is, this paper is not available on your CBE platform. Okay, so you can download the PDF version. And let's see question 3C. We will need to read review and page. Okay. So let me open the, where is it? Oh God, where is it? Here. Okay. So now we're gonna do SBL March 2020 paper. It's called TT4U. You can read it. Is it okay, the size? Let me enlarge it a bit. Yeah, better. Good. And first of all, we'll just go down to question number 3C. The chief executive officer believes that TT4U's current structure will need to change. If TT4U is to introduce the forget about it. Come here. Required. Prepare briefing notes which advises the board on the changes required to the membership of the board and the information supplied to the board. Changes required to the membership of the board and the information supplied to the board. So I will focus on the first bullet only because the question is what changes can we suggest to the board members of the board. It is also called board composition. Board composition means how many people are there, how many EDs, how many NEDs, chairman, CEO, the size of the board, the knowledge, the expertise of the board, and all aspects of the board members. Right, so this company, TT4U, I just give you a background, is it is listed on a small companies exchange, small listed company. And now they are planning to go for full listing like a big company. Okay. Right now they are listed as a small listed company, but now they are aspiring or planning that in the next 3 years they want to be ready for a full listing. So they want to now think about what changes they require on the board. Okay. A second thing I would like to tell is it is a IT company. It's a IT company. They provide IT services like hardware, software, consultancy, network, cloud, all those services to various clients. So it's a service oriented company listed on small exchange, now planning to go for full listing. And also one more thing, that now their customer survey result, they did a customer survey. They did a recent survey of customers and the results were very bad. Their customers were not happy with them. Okay, you're okay with this background. So now the requirement says changes required to membership of the board. So where is the overview? Okay. Do you understand that? The 4 consultants who initially founded the company remain on the board. So the 4 initial owners, they are on the board in key executive role. What is an what is an executive role? Can anybody tell me? They remain on the board in key executive roles. What is a key executive role? Executive role, actually. Arre wow, very good. You guys are getting better day by day. Executive role means they are executive directors because they are full-time working directors with salaries. Okay, so now there's a board composition is given here. So the board role and comments. So there is a chairman and non-executive director. So they have a chairman who is a non-executive director. Now this guy was appointed 2 years ago and he is a partner in a large law firm. Very good. Then another guy is the CEO, the next director. And I know he's a original founder, so if he's an executive director. The third guy on the board is services director. He's also the original founder and he leads TT4U's team for smaller businesses. And then the fourth guy is called the marketing director. He's also the original founder and he leads TT4U's team for larger businesses. And then there is a IT director. He's also an original founder and he leads TT4U's public sector team, which is basically government entities. And there's a finance director. I'm assuming that he is an executive director. He was appointed 4 years ago. And there is one more non-executive director appointed 2 years ago, former partner of large accountancy firm. So how many directors they have? 1, 2, 3, 4, 5, 6. They have 7 directors, right? As of now. Now we need to propose. Now let's assume that you are a management consultant and these people are asking you to suggest changes in the board membership or the board composition so that they can go for listing, full-time listing after 3 years. So there are 7 directors. And what's the split? How many EDs? I think 5, right? How many NEDs? 2. That's the current status. Okay, now guys, I want this to be an interactive session, because this is the kind of question which will come in your exam. Nobody is gonna ask you, hi babe, can you tell us what is the meaning of non-executive? Hey dude, who's an executive? No, no theoretical general question will come. This kind of a scenario will be given. So now can you think of couple of recommendations, at least 3? 3. I'm just opening my chat boxes. Right. So first of all, right now, very good. I've already started getting comments. Very interesting. 50% NEDs. Oh, very good. 4 NEDs and 3 EDs. No, please don't be so specific, because as I said, the law varies from company to company, but at least equal or sufficient number of NEDs. Okay, but ah, okay. So first point I can talk here is NEDs, right? What's wrong with NEDs here? Look at the quantity. So I don't think this is a good balance board, because there are 5 executives and 2 non-executives. This is not balanced, right? They don't seem sufficient enough to make their viewpoint heard. Very good point, Manur. You are very active today. I'm glad. So let me reduce this question box a bit, because I want to look at the. Oh man, this is stuck again. Give me a second. Crazy, but towards the end of the webinar, I think this platform, it also gets tired and it starts hanging like me. I hope I'm not hanging. Wait, I'm just fixing the box. Come on, Baba. Jesus. All right. So the first point, we will say insufficient number of NEDs, and then he will explain how are you saying, what is the logic, how can you support this point. We will say that at the moment there is an insufficient number of NEDs. Out of 7 directors, 5 are EDs and only 2 are non-executive. Correct? Now you say the impact. So what's wrong? What's wrong in having less NEDs? We will say that inadequate or less number of NEDs defeats the purpose of having NEDs, because they are insufficient to make their views heard or influence the decisions. Correct? Very simple. And what do you suggest? What actually the question was, suggest changes. So now what do you suggest? We will say that NEDs, there should be sufficient number of NEDs in the board. Ideally, it should be equal quantities, and they should be sufficient enough so that their points of view can be heard. Very good. That's one point. Now, if I look at the quality of the NEDs, so there are 2 NEDs, that's the quantity. So the chairman has which background? Is he from IT? No, oh, he's from law. Okay. And the other NED, is he from IT? And what is the nature of business of these guys? Yes, they are into hardcore IT. If you read the case, they have so many IT products, hardware, software, cloud, networking, consultancy, hardcore IT company. So don't you think that they should also have NEDs from the same industry or background or experience or the same sector? Yeah, screen is hang because I'm not moving the screen, right? Mhm. But can you hear me? Why would I move the screen? Can you hear me? I want a yes, please, or a no. Oh man, this question box is not good. Right, so the two NEDs, everything is hanged now. Wait a second, guys. I don't know whether you can hear me or not. I'm just checking the systems. Audio is okay. Yeah, audio looks good. Right, right, right. Okay, yes, okay, got it. So, would you like to recommend that they should also have NEDs from the relevant industry so that they can share external experiences? Very good. How do you think a lawyer and an accountant can add value to the business? No, right? NED should be from the IT background also. It is not always, it should not be all the NEDs from IT, but I think some of the NEDs or at least half of them should be from the same industry so that they understand the business. How will they scrutinize the performance of the other directors if they don't know ABC of the business? Got it? Very good. So we got 2 points. One was on the quantity of NEDs, the other one was on the background of NEDs. Now, what else? Do you see some key positions missing? So, what in a growing company, in a company which is growing, it's already listed in a small exchange and wants to get listed on a proper listing exchange, you would expect to see what kind of executive directors? Would you expect a CEO? Yes. Marketing? Yes. IT? Yes, he's there. Finance? Yes. Operations? I don't know. Services director, maybe operations. HR? I don't see HR director. So, these are the some basic executive directors, CEO, marketing, finance, IT, HR, ops. So as the company is now growing and they have, it's a service organization, which means that they are more dependent on employees and the people. So I think if they want to grow, I could recommend that going forward, they should also consider hiring a HR director, customer service director. That's good, but I already see a guy called services director. So I'm assuming this guy is customer services director. So I think HR is missing and maybe operational day-to-day operations is missing because this guy is finance, this guy is technical, this guy is marketing, this guy is customers. So ops, I don't know. I'm just trying to think of some point. So anyways, HR director is missing, right? So can we recommend that they should also have HR director? Now, what about committees? So if they want to go for full listing, don't you think that once they acquire the NEDs, then they should also have board committees like RAM committee, norm committee, audit committee, risk committee? So I would also recommend that at some point in time they will also need to form formal board committees to be led by NEDs. Okay, good points. And one last point which I am sure nobody will pick it up, but just I want to tell you so that maybe in some future question you might think on those lines. Look very carefully. So this guy is marketing director. What do you think he does? What is his role? Marketing, right? So a marketing director's main role is marketing. And what is he doing? He's also leading the team for larger business. So he's doing two jobs, like two roles, or he has two responsibilities. So he is the marketing director. So obviously he's responsible for the entire marketing of the company. But in addition to that, he's also leading the team of larger business. You see this one? Now this guy, IT director, what's his role? His primary role is the IT function of the company, and it is a IT driven company, so it's a very important role, IT director. But in addition to that, he's also leading public sector team. That's not an IT thing, that's a business thing. The services director, whose job is to focus on customer services and this and that, and this guy is also, in addition to his job, is also managing the team for smaller businesses. So these three guys are actually double hatting. Double hatting means that you are doing a primary role, but in addition to that, you are also looking at some additional functions or responsibilities. For example, and this is good, there's no harm in that. But this is suitable for in small organizations. Smaller organizations who cannot afford individual directors, or where the work is not that much, that's good. But now if they are already a mid-sized company and they want to become a full listed company, then double hatting will affect the performance. They will not be able to manage. So what would you recommend here? That as you plan to grow, I would tell them that, listen guys, at the moment, three directors are doing dual roles. For example, marketing director is spending time, is also responsible for leading large business, and similarly, services director and IT director leading some other business segments. As you grow, it will be difficult for these guys to focus full time on these activities. We recommend that more directors should be added and responsibilities should be reallocated or divided so that each director can really work hard and focus on their respective areas to grow the business. What do you think? Good point? So now this is the type of question which comes in the exam. Now tell me, 50% you need to know the concept or the syllabus, right, or the topic, but 50% has to be your own smartness and IQ. Now even if someone has not studied the topic properly, just he's got a little bit of idea about executive directors, non-executive, if that person is smart, he can be able to identify at least 2 or 3 points. Yeah, so this is SBL. More practice will open up your mind. It will make you more sharper, more intelligent, more street smart. I need street smart people to pass SBL. If you are not street smart, you will not pass SBL, because the examiner is testing your business skills, and a person who is not street smart is not a business person. So please, when you practice the questions, don't look at the answer. Understand the technique and the smartness. No model, nothing is important. Just some rational, logical, simple answer is required. That's it. The more you complicate, the more you will get stuck in your own poison. Right. So here we can wrap up tonight's session. I think we covered a lot of things today. It looked easy, it looked less, but I can swear I'm drained now. But we covered a lot of things. We covered entire corporate governance, integrated reporting, professional codes. We did one question. Now we've got 5 minutes left, and I will be very, very happy to take any kind of questions now. Manur, no, I don't think that's the case, because it says he's leading the. He's not. That doesn't specify. That's why. Can we get a? Yeah, yeah, yeah. Of course. Name of my company? It's Facebook. What is a single advantage or disadvantage worth 1 mark or 2 mark? Kamil, for God's sake, look at my previous webinar. We discussed about marks, I think, on day 2. Each point, a well drafted point, carries 2 marks. I'm the CFO of Facebook. Just joking, man. I don't want to be the CFO of Facebook. I don't like stressful jobs. How the board of directors apply? Can we get? Oh, yeah, yeah, of course, Rakib, absolutely. All right, guys. And I'm seeing your comments, Manur. Okay, guys. So I think today was a easy topic, but productive session. Tomorrow is our last day. Tomorrow's big item is the syllabus changes, the technical article, what to study in the last 2 weeks between now and the exam. Oh, and a recap of all the techniques and all the stuff, and some additional topics. So first half, before the break, I will be talking about some leftover topics, and after the break, I will talk about all the syllabus changes, tech article, and recap and the next steps. So please, guys, tomorrow is a concluding day, and how to study all those I will cover tomorrow. So please make sure that you are there tomorrow, right? And with that, guys, you guys take good care, and I will see you guys tomorrow. Till then, take care and good night.